to the On the Horizon podcast, Buying and Selling Businesses, brought to you by Horizon Business Brokers, your trusted guide to buying, selling, and valuing businesses. Your next opportunity is just on the horizon.
Well, hello, everyone, and welcome back to On the Horizon. So, Dustin, lots going on right now in the world. Lots of uncertainty out there. Economy this, interest rates that. But I don't think a lot of people really know what's going on in the world of buying and selling businesses. So today, we're going to peel back the layers of the onions, and we're going to take a look under the hood, if you will, and get some boots on the ground and really see what's going on, what kind of market trends that you're seeing in the space. Does that sound exciting to you, Dustin?
Sounds like a great time to me, and I'm looking forward to talking about it.
It is a party for sure. Okay, so what is actually, what are you seeing today? What's going on? Let's start broad. When you look at the types of deals that are actually being pushed through right now, what types of businesses are buyers aggressively chasing? And are there any out there? What types of industries are you seeing more struggling right now?
Yep. Well, I mean, there's still a lot of activity going on, despite, some of the economic conditions and, uncertainty and, the interest rates, which have been falling and, are expected to continue at the next Fed meeting. So we'll see what happens there. But, a lot of the same things that we've been seeing, in the recent, past, few years, there's, again, still a lot of activity, a lot in the business services space, anything that is kind of contract based where you have a pretty sticky customer base, right? So, whether that's, IT service companies, MSP providers, cleaning service, janitorial, commercial cleaning service companies, lawn care, landscape maintenance, marketing, graphics design companies, have also been, pretty popular. A lot of, again, businesses, B2B services that have that reoccurring revenue model, right? That's what a lot of
that's
buyers,
very effective, right? The recurring revenue is the key.
Yeah, that's what a lot of buyers are after, and it makes financing a little bit easier as well. I mean, if you have a core customer base and you have contracts with them for 1, 2, 3 years or whatever the case may be, and you have high retention rates, you're going to get higher multiples for those businesses, and they're going to be easier to finance.
It's an interesting distinction that I hadn't really given much thought to, but the idea of this recurring revenue versus, not so much recurring revenue, right? It's that is way more attractive if you're going to look to buy a business, right? And it definitely plays into the, the multiples of the business for sure.
Yep. A lot more certainty when you have those contracts, right?
Indeed.
So buyers are willing to pay that value, and lenders are willing to fund it for sure. On the what's not hot side of things are
what's not so hot.
Yeah, I mean it's obviously the opposite of that. If in some cases, but as we look at what buyers aren't really interested in and what lenders aren't so much interested in, or at least they tighten their fists a little bit more than normal. So that's a lot in the restaurant space, because it's a high.
There's a brutal one for you there.
Yeah,
restaurant space. That's got the highest attrition rate of any business, I believe, right?
Yeah. Oof. So they're out of businesses almost as quick as they open. Sometimes, right? Other businesses, construction. A lot of buyers and lenders shy away from construction companies, especially if there's not kind of long-term, maintenance contracts in place or things like that. And anything retail related has continued to get hit hard as e-commerce has continued to grow significantly and take away market share. I mean, you're seeing a lot of these major retailers claim bankruptcy, right? And that's certainly rippling into, the Main Street marketplace. So seeing struggling, retailers, in that B2C market. So not a lot of interest there either, from what I'm seeing. So
are expectations lining up with reality right now? Like, are clients getting their asking price? Because obviously over the last several years, with all this inflation and the cost of living and this whole affordability crisis, if you will, is that translating over into your space, or is it still lagging behind?
No, I mean, not really. It hasn't really been transitioning over for, I think, one main reason, and that's because, the small business marketplace is, getting more attention, right? It's becoming even more mainstream. You have, over the years, you've always had a lot of people talk about, investing in real estate and having rental properties, right? I mean, over the past few years, it's more and more of like, I want to, start a business or buy a business, entrepreneurship through acquisition, right? And kind of really build a business portfolio, like building a real estate portfolio, right? So you have a lot more buyers in the marketplace. And then with that, the sellers that have good businesses, they're demanding more value, and they're getting that value because there is kind of a supply and demand issue, right? With all these buyers out there, right? So the market has been fairly good to sellers, contrary to what I think some others may say. I think we're seeing a little bit more seller financing or structure, over the past couple of years because of the higher interest rates. But as those start to come, down, as we're seeing, I definitely see even more transactions because buyers are going to have more buying power. And, the seller likely won't have to, hold as much of a note, with the interest rates coming down as well.
Interesting. And who are like the buyer pool? Let's talk about that for a bit. Are you seeing like a mix? And I know you deal more on the broker side and not the M&A side, but in terms of like private equity, first-time buyers, you mentioned a lot of people trying to increase their portfolio, alternative to real estate type thing, roll-ups, owner-operators. Like, what are you seeing? Is there anything you're seeing the most of right now, or is it pretty much just like the typical spread that you'd see at any time?
Yeah, I would say, pretty diverse crowd as it's always been, right? You have your independent individuals, have left the corporate world, whether that was from layoffs with, Doge or, any other corporate layoffs because of the government shutdown, and how that may have trickled through, the contractors of the government and those privately held businesses, or whatever the case may be, right? And then you have always people that are just retiring because they're ready and they're looking for their next kind of chapter in their life. And many people dream of entrepreneurship, right? Mm-hmm. So then you have the private equity groups, which we do deal with, and the other strategic, buyers in the marketplace of, same or similar companies. So same mix of buyers. I think you're seeing a lot more of each of them, though, as again, the hot topic is buying, an SMB, a small business. And, you have these even younger individuals that have gone through, an MBA program, and, maybe they've, learned entrepreneurship through acquisition. So you see a lot of these searchers out there, or just even a younger generation of buyers that are looking for good opportunities. And the opportunities that they're looking for are, creeping up into the cash flow ranges that the private equity groups and the strategic buyers are looking for. Meaning so private equity groups are typically targeting like $1 million plus in EBITDA or cash flow. And then you have your smaller private equity groups that might come downstream to say $500,000 to the $1 million range. And then usually, the independent individual buyers are, sub $500,000 in cash flow. maybe $200,000 to $300,000 is probably a good average of what most of these independent individual buyers are looking for to replace their income from the corporate job they just left, and to be able to service the debt from the acquisition. That, they need about $200,000 to $300,000 to be able to maintain their, say, $150,000 of income that they've been generating. So since you have more people coming, it has become, in these three different, kind of categories, the private equity groups, there's so much competition there in that 1 million plus EBITDA. They're coming downstream into that $500,000 to $1 million range, right? With these, other strategics and independent individual searchers that are looking for the higher cash flow. So it's creating more competition in the marketplace. And I mean, for us and for the sellers that we're working with, I mean, it's been a great thing. The past 4 deals that we've launched, we've been able to come to market, through our internal database of, blasting out the opportunity, sharing it with our internal database before even going to market, I should say.
Yeah, and people don't quite understand like the resources that you have available, like this internal database, like the amount of cost associated with what you do behind the scenes. Like it is very, very, I've talked with Russell about this before on the podcast. There are some pretty costly tools that you utilize behind the scenes, are there not?
Oh yeah, definitely. I mean, from, the software and CRM that we, software that we use for business valuation, the CRMs that we use, the buyer databases that we use, all of the marketing and advertising channels that we implement. I mean, there's certainly a cost of that. And, but, I think using all these platforms and tools is obviously helping us better serve our clients to get them the optimal value for their business and to be able to sell it in almost record-breaking time, right? Yeah. Each of these opportunities. So, to be able to list, 4 businesses, send them out to our internal database, which is 13,000 buyers or so, and we segment them into, are you interested in commercial cleaning or daycare or construction? So, those get hit first, and then we send out to our broader list. But these past, 4 deals, 2 of which were daycare centers, 1 of which was a commercial cleaning service company, and the other was a like a plantscaping business. And, we sent it out. We got hundreds of inquiries for the daycare centers with multiple offers. I'm talking about 10 and 12 offers. And then, about 50 to 100 inquiries for the commercial cleaning service and the plantscaping company, and was able to get, between 5 and 10 offers on each of those. So
that's fantastic.
We're able to create that urgency and kind of demand, and, the buyers, kind of know the competition. So they have to put up their highest and best offer because they might not have a chance to, put in another offer or even receive a counter. Right. And the sellers are getting options, right? I mean, we're having these buyers not only provide their letter of intent, but also sharing, a resume or bio and a cover letter, and, just to try to sell themselves. So the seller can also kind of really get to know that buyer. Is this person going to be a real good fit for the company? And then that's who we're going to end up meeting with. We're not going to meet with everybody. Only the top 3 to 5 buyers that have good offers, that have a good background, that we feel comfortable and confident.
That's a great point too, right? It's not, in many cases, for the person selling, right? It's not just about the money, right? This is their business that they built with their blood, sweat, and tears from the ground up. They have employees that need to be protected when they leave. So they're really looking not necessarily for the highest price ticket, right? That would be ideal, obviously, but they're looking for the quality of the new owner that's coming in. They want somebody that's going to help continue to let their business that they built flourish and create an environment for the staff to do well. That's a really important factor.
100%. And I've always said that, even to the buyers, it's important to put in your highest and best offer, but you're also selling yourself, right? And what you're going to do for the staff, and what you're going to do for the clients. You want to make sure that you convey, your interest in the business and protecting the company's legacy and what the seller has worked so hard to, maintain over the years. So It goes a long way. I mean, I've definitely seen sellers take, slightly lower offers just because they felt more comfortable in that buyer.
Yeah, makes perfect sense. And you alluded to like the different the types of buyers and the different sale prices of businesses and things of that nature. Tell our audience what is your bread and butter at Horizon? Like where do you fall into that spectrum? Like who is your ideal, on the subject of like ideal clients, right? Who is your ideal client, right? What revenue do they have? What does their business look like?
Yeah, so our ideal client is typically businesses that are generating about $1 to $10 million in revenue, plus or minus, to then generate a cash flow of usually somewhere around 200,000 to about $500,000 to $1 million, generally on the upside, and that kind of aligns perfectly with all of those segments that I kind of discussed, right? And shared. You hit the first time buyers, individuals that are still looking for a good income of $100,000 to $200,000 a year at a minimum, and then you're also meeting with those corporate refugees or those smaller equity groups and the larger equity groups to be able to get into that, say, $500,000 to $1 million cash flow range.
Okay.
And all industry agnostic. I think we've talked about before. I mean, we're happy to work with any type and size of business. We have a lot of experience over 20 years and working with many businesses throughout the various industries. We do seem to have somewhat of a niche or specialty focus in a few categories, with anything to do with pets and kids and construction, B2B services, and then, laundromats, dry cleaners seem to be kind of, hot industries as well, because they seem to be recession proof in a way, the laundromats for sure. And then, they're probably not going to get disrupted by AI and Amazon. So that's another kind of
not yet anyway.
Right.
As AI slowly drips into every part of our reality.
Right. And, when we start seeing robots, in retail stores and
right. They say that the businesses that are going to flourish when AI takes over, at least for the time being, we're like the trades, like the people that are doing like the manual labor getting on the ground. But like you said, pretty soon they'll just have robots and they'll be able to do it. Yeah. It's coming.
We'll see.
So you alluded earlier to interest rates. I want to talk a little bit about how financing has changed in the climate right now. So like, are lenders generally like cautious, aggressive, somewhere in between? How is that looking on a broad scale spectrum in your mind right now with the climate the way it's at? I know you mentioned the Feds are lowering interest rates. A lot of people don't think about that as it pertains to buying and selling businesses. They think about it as it pertains to mortgage rates, interest rates on credit cards, and things like that. Is there like a one-to-one, like direct rollover in your space from the general kind of topic of interest rates? I'd imagine there is.
Oh yeah, for sure. So, I mean, all lenders, I would say, all the big lenders, the big banks that you're going to be familiar with, and maybe the specialized, online SBA lenders that are out there that we have great relationships with and do a lot of deals with. Banks are conservative by nature, like all the time, right? I mean,
it has to be.
Yeah. So, it's definitely changed a little bit, over the past couple of years as, the interest rates, we're taking a big hike from, their, kind of historic lows, coming into COVID. And
I wish I got one of those loans back then for like 2.5% on a big mortgage.
Right. And SBA loan rates back, right around COVID and after.
Oh yeah, it was very, very low.
Were like 5%, 6% at most, right? So, in its height over the past few years, as the interest rates were increasing, the SBA loan rates were, 10.5%.
Woo! No, we don't like that. We like cheap money.
That's right. So buyers like cheap money. They're willing to spend more because interest costs them less, right? So as the interest rates went up and, it cost more to borrow, buyers weren't as willing to pay, such premiums for businesses because it was going to cost them more money for the asset over time. Sure. Right. So the prime interest rate, which is the rate that the Fed, monitors and controls, that's what we've been seeing, kind of creep down, a quarter of a basis point the past couple of meetings and what's expected in the upcoming meeting here at the end of 2025 is, probably another quarter point, right? So I believe right now we're at 7, right? So 7 is the basis of where your SBA lenders, right? But most of them aren't at their basis, right? They want to make a spread. They're making money on interest, right? So the prime rate is 7, and then usually your SBA loan rates have a spread of somewhere around 2.5 to 3 points. So if prime's at 7, you're expected to likely have a loan rate around 9.5 to 10%, right? So as we see those interest rates, start to come down more, then again, I think the floodgates are going to kind of open again. Banks are still going to be as conservative and tight-fisted, and they are kind of tightening their credit boxes of businesses that they're interested in financing and those that they're not.
Very interesting. What about, like, is there anything that you're seeing that's coming up now related to what we're talking about that are deal killers right now? Things that are, you have something under contract and there's unforeseen things that are popping into the equation based upon where we're at right now in the society we're living in?
Yeah. So, I mean, luckily we haven't been affected with, the deals that we've been working on. But I can tell you from talking to my peers and hearing and seeing some of the problems that they've faced over the past several months, as with the government shutdown and how that affected so many different government contractors, and the revenue and cash flow performance of those contractors, with their projects being put on hold, or maybe their projects being taken away from them completely, and because of the lack of funding for the program moving forward. So that's had a huge negative impact on a lot of GovCon businesses, obviously. I've also seen in the construction space, luckily not impacted by the deals that we were working on earlier this year, but obviously with the administration's initiative in trying to limit the number of illegal citizens, and they've have a lot of ice on the ground, trying to deport illegal citizens. But a lot of these
illegal citizens,
right? I mean, a lot of these illegal citizens, unfortunately, are contributing to the U.S. economy and small businesses, a lot in the blue collar construction space, right? So some of these construction companies have had a huge impact by losing anywhere from 25 to 50% or more of their labor force, right? Yeah. So if you don't have the manpower, you're not going to be able to perform your lawn care and landscape maintenance services, or paving, or building a building, or whatever the case may be, right? So that's had a huge impact. And then we've had a couple retail businesses that we've talked to, and some other like manufacturers and distributors that were affected by the tariffs, and
that's huge.
The unknown effect of the increased cost on tariffs, and how that's going to affect their margins, right? So,
especially if you're a business that has a whole bunch of inputs, like if you're making things and you require inputs from various sources, that will elevate prices significantly.
That's right. I mean, there's a lot of pieces that come from overseas to manufacture.
Right. Even if you're making the product in the USA, but you're getting everything from overseas, right? People don't really think about that. There's a disconnect there. It's like, oh, made in the USA, but well, is it really? Right? Yeah. Interesting.
Yeah, assembled in the USA, maybe not completely manufactured.
98% of it is brought over from overseas, but it's made here.
That's right.
Interesting stuff. Cool, man. So let's shift for a second. Like, obviously, if you're looking to buy or sell a business, having the right broker on your side is extremely important, right? I mean, it goes without saying. And I think a lot of, and you can correct me if I'm wrong, but I think a lot of business owners like think they know what their business is worth, right? But when it actually comes down to it, there's this disconnect there with the actual valuation. Walk us through how you actually go about the valuation process. Like, what does that look like? And how does that work for you?
Yeah. So obviously valuation is key, and understanding, what your business is worth is key to determining as to whether or not now is the right time for you to sell your business. So we start with a kind of a complimentary, review of your financials to kind of give you a broad range of value to see if it's worth the conversation and moving forward, and investing money into your business and actually having a professional written business valuation performed for you, right? Mm-hmm. So our valuation, it's about a 30-page report. It provides 4 different values: an equity value, an enterprise value, an asset value, and a liquidation value. To be able to give you a broad range of value, a complimentary review. Ideally, we would need at least your past 3 years P&Ls and balance sheets, and some year-to-date information, and some trailing 12-month information to give you a pretty good range of value. Ideally, we'd also like to see your tax returns at the same time for the past 3 years. To do the professional written business valuation, we need all that information. We'll have a handful of questions for the client. We might have some other requests to get an understanding of kind of maybe their core customers, client concentration, and then really understanding kind of their role and responsibility of the business, and the infrastructure, right? To see how big their business is, how much infrastructure is in place, and how dependent that business is on ownership, because those things are going to drive the multiples and the value of that company. And then we'll complete the valuation report. We do have kind of a scaled valuation fee based off of the size of the business, but whatever the valuation fee is, we will fully credit that towards the commission when the business sells, as long as that business owner lists their business with us within 12 months of that valuation being performed.
Okay, that makes sense. Lots of moving parts, for sure. You definitely cross your T's and dot your I's.
Oh yeah, for sure. And I mean, we take one of the most simplistic approaches and just analyzing, cash flow performance, the overall financial health and performance of the business. Yes, looking at the balance sheet, we've asked for that as mentioned, but there's many other different valuation practices, that can be implemented or utilized, in the Main Street marketplace, or the upper Main Street marketplace, lower middle market, wherever. So you can see, you have a cash flow value. If the business isn't cash flow positive, you should still have a hard asset value, or the tangible assets that are there. And then you also have like a customer value, right? That customer base that is generating some revenue has value, right? So the revenue that business generates could have some value in itself, even though it's not cash flow positive from the customer base. So different ways to look at it. But and when we do, we're obviously trying to frame it in the best way possible, to get the most value, right? And we're gonna tell the seller, hey, the best way to sell your business, unfortunately, might be to sell it in pieces. You're gonna get the more value that way. Sell your assets for a certain amount, and then sell your customer list for a certain amount, right? We just effectively did that for a client. Doesn't happen all the time, but a professional business broker and M&A advisor is going to recognize that fact, or again, what should help you get the most value. And the quick story of the case study there is that it was a small granite and marble manufacturer here in the DC metro area. So they did your typical granite countertops for your residential customers, but that wasn't their bread and butter. Their bread and butter was working for, one core client and doing, the renovations for like apartments and like senior living centers, right? So that one core customer was really generating, 90+% of the revenue for the business, right? The business was small, single owner operator. I mean, he was in his 60s, ready to retire. It was, very much a lifestyle business for him at that point. The cash flow that was being produced was like, $30,000, right, at best, right? So on a cash flow multiple basis, that business is only worth like 45 to 60 grand, right? But there was a significant amount of assets. You had a cutting saw, you had all this other, tools and machinery and a vehicle. The assets alone were worth $70,000, right? So we were able to actually sell the assets of the business, the tangible, assets, the tools, the cutting saw, all that good stuff for $70,000. And we were able to sell like the name and the customer base to another buyer, and they paid $20,000, right? So a business as a turnkey operation that was only worth about 60 grand, but we were able to break it up, right? And sell it $70,000 and $20,000 for a total of 90 grand. So the seller actually made an extra $30,000 more. Took us a little bit more time and energy, but at the end of the day,
well worth it.
That was the result we were looking for them.
Thinking outside the box. Love it. Love to see it. I know that confidentiality is a big thing when it comes to selling a business, right? Like because of employees, competitors, and just like you mentioned there with a business where they have a very concentrated customer base, where like a very small percentage of the current clients make up a large portion of the revenues. That's a delicate situation for somebody going to sell and the buyer as well, because if you lose some percentage of that base, you lose a large percentage of the revenues. How do you typically go about protecting sellers through the marketing process? And you mentioned it earlier, you did it all through internal channels. Like a lot of people might think that when you go to sell a business, you just list it out there like you would on realtor.com or whatever it is. But like, how do you protect that from the word getting out to the general public?
Yeah. So, when we're marketing the sale on our website or, through our, newsletters and e-blasts to our targeted, buyer list, or, if we're putting it on the biz buy sell marketplaces of the world, it's all done confidentially, right? So, we don't expose the name and location of the business. The buyer needs to contact us, directly, or through these third-party platforms. They'll be instructed to complete what we call our buyer's package. It's a confidentiality agreement, profile, and financial statement, right? So the confidentiality agreement, for obvious reasons, we're going to be sharing very detailed, confidential, sensitive information of that business with the buyer. So we want to make sure they keep it as such. And then the profile or questionnaire helps us really understand about that buyer's professional background, or their business background, what they're really looking for in a business, right? What attracted them to this business, what expectations they have, like what kind of cash flow requirements they have. And that kind of dovetails into the financial statement that's part of the buyer's package, asking for, how much cash or liquidity do they have? What is their overall financial positions with, their assets and liabilities, and how much income are they making? So we can confirm, hey, are they looking to replace their income from the business they purchase, or are they not really looking to operate this business? They're going to keep their job, right? When I say operate, like operate full time, maybe they're just looking for like a passive, semi-absentee to absentee business opportunity for an investment. So
like a laundromat?
Like a laundromat is a good one. But I mean, really, I tell a lot of buyers, almost any business, any good, high revenue, high cash flow generating business can be turned into a semi-absentee to absentee business. But obviously your cash flow is going to be less, right? You just need to find a company that's generating enough cash flow. Generally probably has to be, somewhere around $300,000 plus or minus, to then be able to hire, a manager to replace the owner, promote somebody within to replace the owner, and then you have your debt service, right, from the acquisition, and you still want to have a little bit of money left over to be able to, for the time that you're still going to have to invest and get a return on that investment, right? So, so going back to, confidentiality and sharing, information about the business and being able to protect that, it's making sure that that's front and center, that needs to be accomplished straight away. And we're doing a very good job of getting that information, qualifying these potential buyers before even sharing information about the opportunity. And then once we have shared information about the opportunity, and if they are interested in proceeding forward, we're getting, more detailed information. Maybe it's a resume, maybe it's, again, a bio or the cover letter that's, kind of accompanying their intent of interest or their letter of intent that they're making on the business. And then we're going to have the opportunity to then meet with them, with the seller, all while protecting, confidentiality. And we're reinforcing, like, hey, we're having these conversations, but you can't be talking to employees, you can't talk to vendors or suppliers, or clients. That's not what you generally do during due diligence, right? You need to get all the facts, right, on the business, get all the financials, get all the contracts, review, payroll and stuff, and if there are key employees that need to be talked to, or if there are kind of core clients that are making up a large percentage of the revenue, then we have conversations,
bring them into the fold and have those conversations
with
early,
so
they're not
ownership,
so they're not
how we're
blindsided
going to how we're going to make those introductions.
Yeah. So do you have a
but I mean, we haven't really had many breaches.
Oh, we're glitching out a bit here, Dustin.
All right.
Really? Oh, we're good. What were you saying?
I was gonna say I just haven't really had any.
Oh, that's better.
Any significant breaches, of confidentiality.
I was just gonna ask you if you had an anecdote, like an actual story where a deal, something slipped, right? An employee found out, and then it became an issue. That hasn't ever happened.
No, in 20 years, we've had one occurrence, and it was a buyer that saw a listing online. The name was not published or location was not published, but it did kind of serve a certain kind of geographical area and demographic, and like in a community in Northern Virginia. Not many similar businesses. So just somebody saw the ad. They so happened to be a customer. And the next time that they were in and they talked to one of the employees who happened to be the manager who was related to ownership, right? But they were able to kind of quickly, they either denied it at the point, like, no, that wasn't us. But we do kind of prep the ownership to say, hey, if an employee does say, oh, I saw this, or somebody, a customer came in and they said something, like, I mean, isn't everything for sale at the right price? I mean, do I want to weigh my options, right? I can't do this forever, right? So, like, it depends on the type of morale that is flowing throughout the the workplace and the relationship that the ownership may have with the employees. But other than that, we've done a very good job in keeping things confidential for our clients.
1 in 20 years. Let's knock on wood. No more.
That's right.
One and done, baby. Where do deals usually get messy, right, throughout the negotiation process? And how does having a good broker on your side, optimize that outcome?
Yeah, so I mean, there's a few things that can make a deal, derail. Whether that's not having good financial records, you're trying to get the personal discretionary expenses that the business has been paying for, where there's not great documentation of those expenses.
Especially on the lower end spectrum, right? The smaller businesses that are kind of not already scaled, because generally speaking, the ones that are scaled up, they already have like structure and systems in place and they're more organized. So that would probably do that more on like the less than $1 million side, I'd imagine.
Yeah. I mean, Well, look, I mean, to be honest with you, it even happens in that, $1 million plus price range. I mean, we're going through it right now with one of our childcare center deals, right? And that seller has benefited from some personal discretionary spending for the business, and it's a significant amount of money, right? And the buyers understand the cash flow, right? They know that the amount being claimed for personal discretionary spending is probably true and accurate, right? They can, being in the industry, they can look at the revenues, they can do their own projections and calculations, and see what the actual expenses should be and cash flow should be. We have it's not getting the buyer to understand this and agree to the value and price. It's the lender that we're having to convince and have them understand the personal discretionary expenses that are being written off through the business. And we can provide supporting documentation through bank statements and the credit card reports, or statements that are being paid on behalf of the business. But the lender, in order for them to be 100% confident in the funding that they're going to provide, they're requiring that business to go through an audited financial report to be able to confirm all true incomes and expenses of the business, to be able to clearly define and show the cash flow that we're claiming is the true cash flow of the business, when you take out those personal discretionary expenses. So, I would say, ideally don't do things that you probably think you shouldn't be doing. Or, if you are taking those liberties, make sure that you're not overreaching and that you can emphatically, prove through documentation, that they are discretionary and why, right? So that's number one kind of deal killer, for buyers and lenders. Like, if we didn't have an industry buyer, like, this whole deal could be, disrailed. Thankfully, we also have lenders that we work with that know that this sort of thing happens in small businesses, and they're willing to, accommodate the request as long as, proper documentation can be, provided. So, but, aside from that, the red flags are just customer concentration. I think we've talked about before. You don't really want to have, a customer that's making up, 10%. Some may argue 20% or more of your revenue, because if you lose that client, then you're going to be scrambling. You might not be able to make ends meet until you are able to replace that client. And then as we talked about before, with the illegal citizens or that don't have the proper documentation to work, right? So, I would say, the brokers that are out there that are listening, and the buyers that are out there, make sure that you're going through the proper steps to confirm that, the core employee base of the business, are legal citizens, because that could be problematic. I mean, a lot of the larger strategic buyers and the private equity groups, I mean, they really won't even touch the business, unless there are, legal W-2 employees. Some of these buyers, private equity groups are just completely getting away from the 1099, subcontractor model to ensure that, they have W-2 employees that are legal citizens. And many will argue having employees gives ownership, more control, right, of the product, and having them stay and tie them to non-competes and things like that, to prevent, future competition and solicitation.
Yeah, I think a lot of business owners on the smaller end of the spectrum are short-sighted in their thinking with a lot of the ways they structure and build their business. Like, everybody's looking for instant gratification, looking for the now. And sometimes you have to forego the now and look out for the end result in the future and really have a plan in place. Before we wrap up here, I want to for any business owners out there that are listening, I want you to give, they're not selling yet, right? But they're at that stage. They're getting close to that time, the sunset period of their life, whatever that looks like for them. what's one thing or a couple things that they should start doing right now to be ready for for the time when they're ready to pull the trigger?
Yeah. So number one, always just get your financial house in order, right? Make sure your bookkeeping is solid. Hopefully you have, a bookkeeper or somebody on staff. If not, that's completely okay. Obviously, you can outsource your bookkeeping, but make sure that is your number one priority, is having your financial house in order, because that's the number one thing that buyers and lenders are looking at. But then, second to that is, look at your corporation's like overall infrastructure and look at how much work you're doing or how much time you're putting in to the business that is contributing to the revenue performance, and success of that business. Like, the more valuable businesses are the businesses that are less dependent on the owner's relationships and the owner's performance, right? So, look at your policies and procedures and make sure that people are, in their proper positions and they're cross-trained if possible. So when and if you do step away, there's other people that can do what you're doing, especially if it's in regards to, sales, right? Like, no buyer really wants to step into a business where the exiting owner is the top sales producer and the driver of the business, right? Because they're the ones that have all of that institutional knowledge and information and those relationships, which are very hard to convey, to the buyer, right? So now you can do it, but it's probably over a longer period of time than your normal, like 30 to 90 day transitional training and support period, or buyers are going to be looking at ways to kind of, de-risk, right? If they're not able to, retain those clients, right? They want to do everything they can to, limit the customer attrition. And if that's through, a longer transition period or seller note or an earn-out performance. So try to limit that from happening by making sure that you have enough people on your team to be able to, generate enough, revenues, again, so you're not the main revenue driver. Aside from that, just your normal, compliance, right? Make sure that you're in good standing with the state, make sure you're in good standing with the IRS, that all your taxes have been paid, state and sales, payroll tax, these are things that buyers are looking for in due diligence. Their legal and financial team are going to be, confirming these things. And, even though you might not be in good standing with the state or what have you, it's a lot of the time, it's just simply you forgot to pay your renewal fee, which is only like $50 or $100 in a lot of states. And it can quickly, it's not a large ticket, and it can be done pretty easily, but there's still a time to process that. And,
Sure.
that extra, 1 or 2 or 4 weeks that it could take, could be significant, for you or the buyer for whatever reason. Right. So, it's just kind of a lot of general housekeeping things. Right. And then, kind of like, also think about, if you're selling a house, you have some curb appeal, right? Like, you might need to paint, carpet, maybe you're redoing your bathrooms, yes, the interest and value is generally going to come from that financial performance, but it's okay to dress up your business. Like, you need to maintain your business, right? Like,
Doesn't hurt
the business needs to be painted, the office, especially if you're in a retail or a restaurant environment, make sure your equipment's in good working order. Make sure, your walls are nice, your floors are nice. Like, that first impression is huge for a lot of buyers, because they're going to be coming in and be like, oh, great. This business is $500,000 and it's generating, $200,000 in cash flow. So that's nice, right? The multiples kind of check out, that return on investments there, but oh my gosh, I got to replace a whole kitchen of equipment, and I got to, kind of renovate this place because it's just, shabby.
Yeah.
Right?
Not even that, just like from a psychological standpoint, when a buyer is coming in, if it looks sub-savory, it just like seeps into, well, if the office looks like that, or the business looks like that, what kind of quality of employees do they have, right?
Yep.
And it's just like psychologically that it's a rabbit hole that you go down. It's so easily fixed by, throwing some new paint on the walls, whatever it is, just dress it up a little bit. You don't have to go crazy, just make it look appealing. Makes perfect sense, man. Look, wise words from a wise man. Cool. All right. Well, let's leave it at that. That was fun. Everybody, thanks so much for tuning in. You know the drill. If you found this content useful, don't forget to like, subscribe. If we missed anything, if you've had your own experiences with what we're talking about, let us know about it in the comments. If there's anything you'd like us to discuss on future episodes, please reach out. Let us know. We always love to hear your feedback. Until next time, everyone, take care and have a blessed day.
Thanks, everybody. See you next time.
That wraps up this episode of On the Horizon podcast, Buying and Selling Businesses, brought to you by Horizon Business Brokers. If you found value in today's episode, be sure to subscribe, leave a review, and share it with someone ready to take their next step. For more resources and personalized support, visit www.horizonbrokers.com or call 703-910-7384. Thanks for tuning in. See you next time on The Horizon, where buying and selling businesses creates opportunity.